Good morning, traders, and welcome to BCR's morning market analysis. Let's take a quick look at the latest move in the markets and what's driving sentiment across some key assets. First up, let's have a look at the US dollar index. The DXY edged up to about 98.49 on Monday, rebounding from Friday's low as traders positioned ahead of today's US inflation data. July CPI is expected to rise 0.2% month on month, down from June's 0.3%, while the annual rate is forecast to accelerate to about 2.8% for a third straight month. Core CPI is also projected to pick up to about 0.3%. Despite persistent inflation, markets are still pricing an 88% chance of a 25 basis point rate cut by the Federal Reserve in September, with another cut fully priced in for later this year. Traders are also monitoring US-China trade talks, where another 90-day extension is widely expected, and Friday's scheduled meeting between Presidents Trump and Putin on Ukraine. Other key US data this week includes PPI, retail sales, and industrial production. Technically, the index is still under pressure, trading below the 65-day simple moving average at 98.59 and the 89-day at 98.94. Multiple failed attempts to reclaim 98.59 suggest that strong resistance exists at that level, with support seen near 98 to about 97.83. A break below could expose levels of 97.7 and 97.1. Upside remains limited unless the index holds above 98.59 and clears 99. Next up, let's have a look at WTI crude oil, which traded around 63.30 per barrel on Monday, but remains on track for its steepest weekly drop since late June as tariff concerns weigh on the outlook. The focus now shifts to Friday's meeting between Presidents Trump and Putin, with hopes for a diplomatic resolution to the Ukraine conflict and potential easing of Russian sanctions. On the charts, WTI is stabilizing near 62.60, which is the 61.8% Fibonacci retracement level of the May and June rally, and the neckline of an inverted head and shoulder pattern. This level will be key for determining near-term direction. A hold above would see a retest of 63.16 and 65.76, while a break lower would put $62, 61.60, and the psychological $60 level back into play. Next up, let's have a look at gold, which dipped to about 33.40 on Monday after President Trump reversed plans to impose tariffs on the metal, easing concerns about import costs. This follows a brief period of uncertainty after a U.S. customs ruling that Swiss and other foreign gold bars would be subject to 39% tariffs. Trump also extended the suspension of high tariffs on Chinese goods for another 90 days. Technically, gold remains capped below the $3,400 resistance level. The recent pullback found support near the 50-day moving average at 33.50. Helping to maintain the broader bullish structure. The RSI sits around 50, signaling neutral, mildly bullish momentum, while MACD remains positive. A close above $3,400 would open the way towards 34.50, while a break below 33.50 risks a move back towards $3,300. Lastly, let's have a look at the Australian dollar, which held steady around 65.15 on Monday ahead of today's RBA policy meeting. Markets expect a 25 basis point cut to about 3.6% following softer Q2 inflation and rising unemployment. The RBA has dropped forward guidance, with Governor Michelle Bullock emphasizing that decisions will be made meeting by meeting. moving. Technically, the Australian dollar remains above its 9-day simple moving average at 64.81, with RSI just above 50, signaling a slight bullish tilt. Upside levels include 65.76 and then 66 cents and 66.25, while support lies at 64.81, followed by the 64-cent psychological level. That's all for today's morning market analysis. We'll be watching today's RBA decision closely, along with positioning ahead of tonight's US CPI release. As always, manage your risk and happy trading.